Welcome to a brand new show of Markets Tomorrow. I am Nikunj Dalmia. After today's hope, hype and triple-digit Sensex rally, what is the way forward for Indian markets? Have private banks rediscovered momentum, and are political triggers strong enough to take Nifty to a new high? We'll discuss all that and much more for you in this edition of Markets Tomorrow. But joining me on this edition of Markets Tomorrow are the following gentlemen. Nick Paulson, he's Country Head of Espirito Santo Securities, Varun Goel, Head of Portfolio Management Service at Carvey Wealth, and to give us an understanding of the technical setup, Ashwini Gujral of ashwinigujral.com. Let me kickstart today's panel discussion with Ashwini Gujral. Ashwini, a good day, strong day, banks led the rally, but Nifty corrected from the day's high.
There are different types of gaps. Had it gapped up only 50-60 points, an 80-point close would have looked good. But once you have a 140-point gap, unless there are extraordinary circumstances, generally you see the market correcting. But what the good news here is that the market has consolidated for some time, and hence today's gap should not be considered as the exhaustion gap, the one final gap that happens at the end of a rally. More so, it should be considered as a beginning of an uptrend, and that is confirmed by longer-term indicators which have given buy signals. So as long as 6200, 6220 sustains, I think chances are we should move higher from here. But as with the market, you will have choppiness and up and down days, but slowly the trajectory would be higher.
Varun, what is your understanding? Do you think today's market action, today's price action was all hope and hype?
Well, my own sense is that things are turning better, for India from a macroeconomic perspective. I don't see Nifty, falling sustainably below 6,000. The real question is how quickly the rally really builds up. And that is going to be a function of, both political events as far as the global cues. We have a big, non-farm payroll data coming out today. And, if that data is also supportive along with the political news, I would expect that the upside would happen, far quicker than what most of us have been expecting. Also, I believe the next quarter's results, like this quarter, could tend to surprise most of the market analysts on the positive, and that could be another positive trigger and the trigger for this rally to sustain. So my own sense is that the worst is behind us, both from a global and a domestic perspective, and I see a gradual upturn. And if some of the events that I talked about happen in a very positive way, the rally could happen sooner than expected.
Nick, it seems like Christmas has arrived 2 weeks early. How should one approach Indian markets now after today's big triple-digit rally?
Well, I think as other commentators have been saying, clearly you have a lot of enthusiasm for political change, and the exit polls suggest there's going to be a change in government. I think it's a good thing. I think it's another factor which probably means an okay outlook for 2014, but I think one needs to be careful not to underestimate some of the structural challenges that the economy still faces. That political change in itself is good, but it takes time for that to then feed through in resolving some of the challenges the Indian economy faces and frankly emerging markets face in 2014.
Actually, the Bank Nifty had an exceptionally strong day. Markets came down, but the Bank Nifty was firm like a rock. So suddenly 25-26% of the market is looking strong.
See, that's where the optimism comes in from, because while the Nifty came down from the highs, Bank Nifty almost closed at the highs of the day. So chances are that if the banking rally continues and the Bank Nifty heads towards 11,900, 12,000, then obviously the Nifty also must move up. So clearly out of the three indices, while CNXIT is not exactly weak, it's sideways. I think we have Bank Nifty, Nifty, and then CNXIT in that order. So chances are that, post-consolidation, Bank Nifty should move to even higher levels.
Nick, if your underlying thought is that structural problems for the Indian economy are not over, and if cyclical stocks have seen some degree of run-up, do you think it's time now to cash out of some of the cyclical names, some economy-related stocks?
No, I don't think it is. I just think you need to just, within your investment framework, just be mindful of the risks you face in 2014. I think the combination of enthusiasm for political change, a gradual recovery in the economy next year and a gradual recovery in the earnings cycle. The fact that fixed income as an asset class is unattractive is likely to be in a sustained bear market, so equities are going to receive the bulk of flows. And also developed markets have had a very, very good year this year and so look expensive. I think that means that gives you a reasonable outlook for 2014 in terms of equity markets. And it's logical to, given what's going on, to add a little bit of cyclical exposure. But I just think one needs to just be mindful that don't chase too much beta, don't take too much risk in portfolios. Some of the themes we've seen this year around export-orientated stocks, things like that, I think those will persist, and I think the rupee will remain relatively weak. And so it's more in case of I'm not negative on equity, I'm just probably there's a degree of caution on the overall outlook.
Well, the real engine for the market today was ICICI Bank. Big movement, 6% up for ICICI Bank. It's a Sensex heavyweight. It has 8-9% weightage on the Nifty. 1135, a clean breakout, a good close, and a close which was accompanied, or the price which was accompanied with a lot of underlying volume support as well. Ashwini, do you think for the moment, has ICICI Bank rediscovered momentum? If that is yes, that is good news because this one is a heavyweight, this one is a big one.
Well, why only ICICI Bank? The entire bank Nifty is moving up, so obviously other banks are also looking strong. But if you have to pick out one, yes, ICICI Bank was moving sideways between 1,000 and 1,100. Today it's decisively closed above those levels. So chances are that from here we could see a move towards 1,300 on ICICI Bank. See, now all this is incumbent upon, the global markets acting well. So all things being equal, the breakout that has happened today, if we get a decent global market, should sustain, and if Nifty goes to 6,400, ICICI Bank will see 1,250 to 1,300.
The question we are asking on this edition of Markets Tomorrow is that will the BJP victory take markets to a new high? Which is that if the Sunday's outcome for assembly election is on expected lines, will that nudge the market needle? Varun, what is your sense?
My sense, Nikunj, is clearly we might have a positive uptick and a very short-term, a quick move upwards. But for that to sustain, we would need some kind of a global support, and we would also need some kind of fundamental support. So my own sense is that, as if we see continued reassurance in the global market that QE is going to continue, and we believe that it is going to continue till at least March. And we also expect earnings to really support the market in the month of January. So both these things are going to be extremely critical for market to sustain, even if we see a pop on Monday.
Ashwini, what is your take on IT now? The correlation trade is no longer working for IT, and if at all, the correlation trade is negative now.
See, these stocks are not going up, but they are not falling either, which means other than the rupee, also there are other factors which take care of these stocks. Broadly, the IT index is quite sideways, and also these stocks are consolidating. I won't say they are going in any sort of deep decline. These are times when you need to build up positions on these stocks, and whenever the rupee turns, chances are that you will see major upsides. Given the fact that they're up 50 to 80% over the last 1 year, they will go through a long period of consolidation while the rupee has its upsides. But once the rupee starts declining again, you can be sure that they will make fresh highs. So the bull markets are intact there.
Varun, are you a buyer in IT? Are you using the current numbness, the current weakness in IT to buy more?
Well, my own sense is that rupee is going to stabilize around the current levels, considering the fact that most of the rupee depreciation which has happened this year, which is to the extent of 20%, is helping these companies to acquire new orders. Indian IT has definitely become far more competitive in the global environment as compared to what it used to be 6 months back. So I believe IT sector has a competitive advantage which is going to last them at least for the next couple of years, and therefore IT becomes a very, very core part of the portfolio. In terms of how quickly the stocks start moving up, I believe that the next quarter's results are critical. If the revenue growth that IT companies deliver in next quarter are as robust as they were this quarter, then I would expect the upside in most of these companies to continue. So I would be a buyer in IT at every dip and would definitely want ITV to be a part of the long-term portfolio.
Jumping on IT and FMCG, what's going on there now that cyclicals are making a comeback? Do you think consumption, exporters and brand owners will take it slightly easy?
So I still think export is a theme. I think the rupee is going to remain weak. So IT, you've got a combination of it benefits from the currency, but also remember that the end markets and discretionary spending are very strong. I just think you have to be more careful. If you play TCS, it's too obvious. Take a stock like Wipro, where it's had 2 years of restructuring, it's had more issues, it's trading at much lower levels, it's sub 14 times FY15 earnings, and I think it's rebalanced itself, it's less exposed to specific verticals like telecoms, so I think you're going to get margin improvements, and it may well beat expectations. Some of the mid-cap IT names like KPIT, Cummins, for example, Persistent Systems still look good. Pharma, again, I think the sector still looks attractive. It's just fine stocks which have had more issues. Cipla, for example, on the MedPro consolidation, had a bad one-off in Q2. I think that looks attractive. And then in autos, I think we favour, again, like the theme of export orientation with autos, but favour the auto component stocks. So Motherson Sumi actually I think looks very good for 2014.
Right, Varun, in terms of a portfolio approach, how much are you currently aligned with mid and small cap stocks?
Well, I believe mid cap and small cap sectors have significantly underperformed Nifty in the last 5-6 years, and there is definitely an opportunity for a big catch up in most of the mid cap and small cap names. Although one would need to be very, very careful in terms of what stocks to buy. So as of now, in our flagship portfolio, we are running almost 25 to 30% of stocks from the mid cap space, because we believe these are the stocks which can provide a significant amount of alpha to the portfolio. So be it mid cap private sector banks, mid cap pharma and IT companies, and telecom, these are the sectors where we see significant amount of value emerging from the mid cap space.
Ashwini, in the month of December, apart from election, we've got a RBI meeting, we've got a Fed meeting, so it's going to be a noisy month. In general, what is the trend? What is the trajectory? How should one maximize in the month of December?
Well, as I've been saying that for the last 3 months, we have basically been range bound since, basically 15th of October. So now that we seem to be breaking out of this range, a 200-point range, chances are in the month of October you could head towards 6,400 with much more participation from mid-caps. So that's something that's likely. But for that, we'll have to see some global support. These meetings, you see, come and go, and most of it is often priced in. And if the trend of the market is higher, even if there are some adverse outcomes, the market corrects for a day and then starts moving back up again. On tapering, we've seen enough drama happening. Every time they say it's on, we find out that it's been delayed. In terms of rate hikes, I think everybody expects rate hikes, so nothing new is going to happen there. So chances are this trend is likely to continue.
Varun, you have a large and a decent holding in pharma. Are you looking at revisiting that position? A, pharma is not looking cheap. B, if cyclicals are making a comeback, farmers will take it easy. And what is cheap in pharma has got hit because of US FDA problem, be it Strides or Ajanta for that matter, Ranbaxy or Wockhardt.
Well, definitely we have trimmed positions as far as pharma space is concerned. There has been quite a bit of profit booking which was needed to be done. I think as far as the US FDA issues are concerned, one needs to really separate the kind of companies that we are dealing with. I think most of these companies, because they have a significant presence in the US, these are now part and parcel of the whole game, and we expect that most of these companies will continue to face FDA issues on a running basis. However, there are some companies, some managements which probably have not been looking at this FDA issues with enough seriousness, and those are the companies that one needs to avoid. But other than that, I believe that pharma sector continues to be attractive. One needs to really go down the chain. We are looking more and more at mid-cap pharma companies because most of the large-cap names seem to be adequately priced. So there is definitely value. Most of the mid-tier pharma companies are trading at 10 to 12 times FY15 earnings, and we definitely see 20 to 25% kind of upside in most of these names.
After a 1% appreciation on the Nifty, what should one focus on tomorrow? For that, let's go to Navneet.
Hi Nikunj. Well, the dealers have been recommending to buy into Maruti Suzuki on back of yen weakening. According to them, the stimulus package which is announced by Japan will weigh on their currency, which will make the imports cheaper for Maruti, and in return that will aid the margins. And well, if you look at the stock today also, that surged nearly 3.5%, and YTD returns for Maruti have been about 14%. The other counter which they have recommended is VST Tillers. Now, if you look at this counter, it touched 52-week high in today's trading session, and the dealers have recommended buying on back of some institutional interest which has been seen in this particular stock for this week. We've seen HDFC Mutual Fund that bought about 1.5 lakh share in the open markets, and back of which they've given a buy call. And also, if you look at the stock, it's given good returns on YTD basis. The stock is up nearly 62%.
Ravni, thanks a lot for that. Ashwini, what are your top ideas for tomorrow?
Crompton Greaves is a buy with a stop of 124, target of 132. PFC is a buy with a stop of 160, target of 174. And Bank of Baroda is a buy with a stop of 650, target of 700.
Nick, how would you allocate current capital? Give me some names, give me some ideas where you're happy to allocate 7 to 8% of your capital.
Okay, so I actually think mid-caps is going to be one of the themes of next year. And within mid-caps, I think two themes to look at. One is M&A within the private sector banking. You've seen changes from the RBI, and I think of those, the ING Vysya, it's a very good quality business. Look at the way the management's run it over the last 3 or 4 years, turning around that bank. It's trading at 1.3 times forward book, and I think it could either be an acquisition target for an increase in stake by ING, the parent, or it could be if ING chooses to sell it to another foreign bank. Now foreign banks can take up to 74% stakes. And the second one is within autos and auto components is Motherson Sumi. I think, again, very well-managed business, competitive advantages. You've got improvements in its European businesses, the 2 acquisitions it made, and I think it's well set going into 2014.
Varun, I broadly know your portfolio strategy, which is your long IT, you underweight pharma, you like private banks. Anything out of the box which you've added in your portfolio? Anything where you're convinced that, it's worth the bet, it's worth taking that risk?
Well, Nikunj, after 3 years, we have turned bullish on public sector banks. We have been avoiding the space, through and through. Now, I believe, looking at the valuations, most of the, mid-tier public sector banks are at, less than half the book of FY15. I believe if there is one sector which can really double in the next 2 to 3 years, it is the public sector banking space. The worst probably seems to be over as far as the asset quality is concerned. I personally don't expect very significant increase in interest rates from the levels that we are currently. So that is clearly the space to go really aggressive on.
All right, Varun, Nick, Ashwini, gentlemen, appreciate your time. Thank you for joining us.